Maybe you've heard the term private lending, but you're not sure exactly what that means. If so, then you're in the right place, because today in our Insider series, we're going to answer the question, what is private lending? Ray Burkhalter here with REI Funding Partners. We are a private lending company based in Tuscaloosa, Alabama, and we're going to answer this question that really everyone that's curious needs to know the answer to this powerful strategy. So first, let's talk about this fact. Private lending truly is an industry. Sometimes when people hear about this through a friend or family member, they may think at first, it sounds like you're talking about loan sharking, when nothing could be further from the truth. So with this industry, there's actually an association that represents this, and our company is a part of this association. We're glad to be a member of the American Association of Private Lenders. This group will educate, they will hold conferences, they bring vendors together. That's been very helpful for us to get new technologies involved in our private lending business. So private lending truly is an industry. And when people understand the fact that, especially the kind of private lending that we do, which is private money mortgages, it's exactly the same thing that so many people are familiar with, the process that banks use to make loans and to use properties with a mortgage to have collateral. So it's a process that everyone knows. Mortgages are common, they're in the news. Most people in America have signed a mortgage document before, and they've made mortgage payments. So with this, you're just acting as the bank to be on the receiving side of mortgage payments instead of making mortgage payments. And we know intrinsically that lending works, because any large city that you go to, the tallest buildings tend to have bank names on the top. And in many communities, there's banks on every corner. So the banking business model of making loans secured by properties is an excellent business model and a very successful one. Just the question is, how can people participate as private lenders in something like that? So that asks the question, why do people choose to lend? Why do people like this as a model? Why are other people curious in it? Well, first, it is the asset type that provides monthly income. So there are many assets that you can be involved with that are for growth only. And those are great when all you're looking for is growth. But when you get to the point in life where you want to have passive income and you want it on a monthly basis and you want it to be predictable, so it's not going to be up and down maybe like some kind of dividend paying stocks could be, with private lending, you get a certain amount each month and it's very predictable. So people like that income component, and they can either choose to spend that money if that's what they're using it for, as passive income, or if they just want to see a nice stair-step growth and be able to compound interest, then they choose to do that. They don't spend the income, they redeploy it and get the compound interest. The other factor at play here is that there's actually collateral backing up these kinds of investments. When people do private lending and they do what we're speaking of here on this video, they're using first position mortgages on real estate. So they not only have collateral, they have collateral that is in the stable asset class. So predictable monthly income and collateral are two of the huge reasons that people choose private lending. They love private lending and they keep doing it year after year to grow their finances. So on the income side, let's talk about that for a moment. Where is this income coming from? Well, private lenders like us make loans to companies that are in the business of renovating properties. And for some private lenders, it could be renovations of commercial properties, apartments. We choose to do single family properties up through 4 units, maybe a bit larger if it's really a nice deal and it's really an easy decision. But for us, it's very cut and dried as to what we do, what we don't do, and it makes it fast to be able to approve loans and approve borrowers. So that's where the monthly payments are coming from, is the companies that the money's loaned to for renovating properties. And again, it makes a predictable monthly income because there's a promissory note that these companies sign, and then the accompanying mortgage that specifies a certain amount that's going to be paid. So you know the interest rate right up front that you're going to get when you're a private lender. Now, on the other hand, what backs these things up? We're going to talk for just a moment about collateral on this video. We're going to do another video that talks in more detail about the collateral and the leverage. But in our case, and what many private lenders across the country choose to do, they do a 65% loan to value as their typical rate. So an example of that with dollars on a house, a $200,000 house would then qualify for a loan of up to $130,000. So you can see there's a $70,000 what we call equity cushion between the loan amount that's made and the value of the house. So as a lender, you always have to take the worst case scenario. What happens if I need to take this property back? So if I have a loan out of $130,000 and I can take a property back that's worth $200,000, then I'm feeling really good about that equity cushion, and I love that type of collateral. So the borrowers, they take these properties and they renovate them to make the property look like new again. So not only do we have collateral, but through the process that's used, the collateral ends up looking great and being some of the best looking properties on their street. I'll show you some pictures of those in just a moment. And then finally, after the renovations are done, our borrowers will either list the property to sell it and make their profit, and that's when they pay us off, they pay the private loan back. Or if they're going to keep the property as a rental property, then they're going to go start a refinance process and go to a bank that will give them a long-term loan. And then when they close on that long-term loan, that's when we get paid off as the private lenders there. So either way, we're getting paid off in the short term on these loans. So here, let's look at some physical results for a moment. So these three houses that you see on the screen are just a few examples of the projects that we have funded. And as you can see, the projects end up looking nice and they're improving neighborhoods. And these are just a few of the 400 plus loans that we have funded since our company started this business in 2011. So we have physical results here. On this page, some fiscal results. So the numbers speak for themselves. Here are two more properties that have been completed recently as of this recording in September 2024. And year to date for 2024, we've paid out over $684,000 in interest. So what we do in our business model, in our company, we fund a portion of each deal. We have co-lenders that fund a portion of each deal. So we earn interest, our co-lenders earn interest, and the number you see on the screen represents the amount of interest that has been paid out to our co-lenders so far this year. So I mentioned on an earlier slide, passive income. The hardest thing that our co-lenders have to do with these is e-sign a few documents and they get paid their interest each month. So private lending is a very nice model, again, if income is important for you. And when you see a house like this one on the screen, this is in the Mountain Brook area of Birmingham, Alabama. This house, when it came on the market, was tired, it was old, it was outdated, and now it looks great again. And it's been sold and there's a new family in there. And so what we consider this to be is impact investing. And we love the fact that it improves Main Street, not Wall Street. The money stays local. It's improving local neighborhoods and not shipped off to Wall Street doing who knows what with money and maybe making a return or maybe not. We love impact investing. So that's it for this video. We have more to come in this insider series, things like why borrowers choose to use private lenders. Why do they go with us instead of banks? How safe are private money loans? We're going to talk about some of the things that we look at as professional private lenders to mitigate the risk on the loans. We're going to do a video on the topic of private lending with a traditional or Roth IRA. Very exciting, especially with a Roth when you can generate tax-free income. Yes, I said tax-free. When you invest with a Roth and you're of the age that you can take distributions, that's tax-free income. Super powerful. And then finally, why loan to value is important for a private lender. So that's it. I hope you've enjoyed it. I look forward to the next one. And until then, take care and God bless.